Right, we finally had this move as expected on Aussie New Zealand after this long-term range, this reversal pin bar. We're going higher. We are now ready to engage. Unfortunately, it's the end of the week, but it is definitely ready, and we have now got our bias on Aussie New Zealand. So that is the interesting one for this week. The rest are not as actionable, and I will go through why. Let's begin by going through what we've had this week, and we're also going to talk about how to skyrocket your profits from one trade setup, from one idea. So less hassle, less headaches, less analysis, and more profits potentially. I'm going to go through how to do that. Of course, let's go with what we've had this week, what has happened, and see what we can learn and where we went well, where we went wrong, how we can improve. Let's begin with the dollar index. As we always do, we have our pairs here on the short list. So let's go through those. Okay, dollar index expected a reversal. That did not happen. We went through our levels, did not create any reversal. So nothing to see here on dollar index, really. What can you say? This did not happen. Nothing occurred that we wanted to occur. Therefore, there's no reversal here, nothing of interest, and that would be similar to the other dollar-based pairs. So let's go through them, and we're going to start with a euro dollar. A euro dollar did not reverse to the downside, to the upside, as the dollar did not reverse to the downside. So we don't have that reversal yet, and a move higher. Let's see if we do. Next week, we'll see what happens. So we had this scenario B, higher, then move, and then scenario C, move lower, and then pull back, continue lower. Didn't happen, continued ranging, nothing. Yeah, no setup here, no entry signal, whatever you want to call it. More patience, more waiting. The game is about the movement of money from the impatient to the patient, as Warren Buffett says. Good thing is we had our parameters all set, so it's easy to trade, easy to know what we look for, and the market just didn't give it to us. Well, that's fine, but it is what it is. It's just perfectly good, well planned, and good decision making. Very easy to follow. Let's move on to the next one, CAD Yen. So CAD Yen, we said if we don't get a reversal, we have a break through the level that would indicate a buying bullishness, and that's exactly what the market did. Therefore, there was no entry here. Of course, you could say that we could have bought here, we could have bought, but we were looking for the sell. And then after we invalidated, if you look on the lower time frame, we went through it, which would be a buy idea. So you could say that, for example, we have a level here. There's a level down here. If you look at this, that could be a potential. However, the reason why this would not be a good setup for me, high quality one, is because we had this whole movement, all this 200 pips, the whole week, just a straight rise. So for the market to move further, even further, of course you never know, but for it to move, the probability of it moving even further, even higher, gets reduced and reduced, especially as we're coming into this level and hitting these highs over here, despite the fact that we are now bullish. So difficult to read, and yes, the market is going away without us right at the end of the week on Friday, but you really want to catch the market when it's at its low. So here, if you were thinking of entering here, that would have been better on Tuesday, Wednesday, but not right at the end of the week. The probabilities are reduced, so the risk increases of the trade having failed. In this case, it didn't, but that doesn't mean anything. It's only about a series of trades, and in the long term, you will see that often it does not work out like this. So you could say that this is a bit of a anomaly this week for this kind of situation to happen, the market to go up almost the whole week without any major reversals. Right. So that is CAD Yen, and Euro Yen, you could guess probably similar. Had a brief move down, but there was no reversal here. We just kept going up and reached this invalidation point. So once again, another case where there's just wasn't any clear signal, clear sign of entry. Let's have a look on the daily. You can see on the daily candles just went one day after the next, and we expected a reversal, but it didn't happen. So we just adapt. No entry there. Not taking any risks, keeping our accounts safe, and letting the market do what the market wants to do. We'll have to submit to it, not according to our terms, but what the market wants to do. Okay, moving on now to EuroCAD. EuroCAD was clearly a ranging market. We were looking at scenario A, did not happen. Scenario to the upside, scenario B to the downside did not happen. And scenario C did not happen either. So we are kind of tighter and tighter within this range. And now on Friday, we had it looks like kind of a breakout of a trend line, a breakout lower. And let's see what the market does next week. But for now, again, it's a case of waiting. I know we are playing on the higher time frame, so it takes longer for things to play out, but it just needs to show us direction. When we have no clear direction, that is the main problem. That is the main thing that you most likely struggle with. So if you struggle with identifying direction, it's probably because you are going chart to chart, time frame to time frame, and don't have a clear direction for your week or for your day. And because of that, you get a bit messed up and confused. And yeah, this just saves, you can see how much easier this is, how much confusion it saves just by waiting and knowing what we're looking for and then waiting for that to happen. And if it doesn't happen, it doesn't happen. And now, Aussie New Zealand, on the other hand, is a nice clear one because, well, what did we say? We were waiting for that breakout, and this is what we are having. We did say that this was the likely scenario, a poke to the low, which it did, and then the reverse, exactly what has happened. You can see the daily candle creating this pin bar. This was a fake engulfing candle. I did not follow through. If you have a look on the 4-hour time frame, you can see that we were indeed waiting for a break of this level first, and it just poked above here on that day and then went lower into this range, and now we are breaking the range. So now that the range is broken, we've got our clear level indicated and waiting just for this. So a swing moving higher and higher into the next levels. So that is Aussie New Zealand. You could potentially, if you go to the daily, enter on the daily. So we don't need that anymore. That was our reversal piercing line bullish. That did not follow through. So it didn't work out that time. But all is well. We have our parameters set and you can see clear bullishness coming in. So that would be the idea, and we have our next target. So we'll come back to Aussie New Zealand in a bit. Let's just cover the others that we have on our list. First of all, gold. What we were saying is gold to break lower, pull back and continue to the downside. Now what has happened? We have broken through the level, we have gone lower, we have closed lower. If you look on the weekly, we have a ranging market. On the daily, we have a ranging, and we have these two levels, the high and the low, marked out. We've broken through that low, and just as we broke through, we just retraced right back into the level. So we did not have this play out. We did not have a break, pull back and continue. We had a break through and then went right back into the range. Did not create any reversals. So as you can see, here we are on the 4-hour, just about broke through and then just moved right back in. So now this becomes a possible anomaly. I don't know what will happen, whether we will hold this high and continue lower. We'll have to reassess next week. But so far, this is a kind of a fake breakout, it looks like. We have a very brief breakout, not quite a lot of momentum to the downside. What you can notice is that this candle right here is smaller than really, let me just make it more obvious. We did break to the downside. And at the same time, you will notice that this candle is not as big, for example, as this candle or this bullish candle. So relatively speaking, when we have a real move, a real change in the momentum, we have really big candles. And this candle is more or less the same as previous ones right here on this trend. So that would be a clue. And then on the 4-hour, if you were looking at, for example, this level here, what you can see is we did not have any reversal, we did not have any price action, we did not have any pin bar, for example, or engulfing. We just had the market come back right through the level. So it looks tempting. It's easy to get tricked by these. You may be as well. The most obvious ones will be very, very clear when you see them, but sometimes they just don't work out. The market has its own idea about what it wants to do. So that's a good example. And gold sometimes does this. If you know gold, if you trade gold, you'll know that it has a very wide swings. It can be very volatile. There's a lot of liquidity. So it does have really big, rangy, wicky movements. It's a bit of a roller coaster. Gold is not my favorite, I have to say. I prefer the most stable ones, so to speak, if there is such a thing. And yeah, as you can see, no continuation, the brief harami inside bar, and no reversal sign. So reversal sign would look like a wick to the upside, some kind of reversal candles on the daily, a pin bar, a big engulfing bar, bearish, but that did not happen. Okay, so there's no trade there for me either. And finally, an oil. Oil, we were looking at the downside. We did not have the break to the downside, did not have a break to the upside. We're just stuck in this range, continuing to be stuck in there. Not very clear where we're going, what we're doing. You can also look at this as a bit of a wedge, kind of a wedge pattern if you want. And we are squeezing the price, squeezing before we have an explosive move. That's what generally tends to happen. The longer the squeeze, the bigger the squeeze, the bigger the ranging market, the bigger the explosive movement out of it. So yeah, again, we'll have to wait for that. That is the markets for this week, and that's where we began, and this is where we ended up. And what we're going to talk about now in this lesson is how to skyrocket your profits from one trade setup. So instead of what are we going to do? Well, by the way, if you like this video, click the like button and the bell and subscribe to get more of these helpful videos. So, how do you increase your profits from one setup with one analysis, with one chart, with one market? How do you make the most of it? Well, we're going to apply the Warren Buffett philosophy, which is to say we wait for the best setups and then we really go in hard on those really great setups. So Warren Buffett hardly invests in any companies, maybe once a year or once every 2 years. And when he makes a decision, he really goes for it. So he's not shy to really go ahead with it. So he goes in hard and he makes a decision and he just goes for it. Now, to apply to trading day to day or week to week, we can do the same. So we really find the best quality setups and just focus on those rather than switching between them. Now, I give you options every week and we have options to trade if one works or the other doesn't, and we can move from one to the other because the markets take time to develop. However, if you focus in on one setup, which we're going to look at, you probably guessed is going to be Aussie New Zealand for this week as an example. If you focus on one setup, this is how you can maximize it. Let's say, for example, first of all, what you need is a reversal point, you need your target point, and then you need to maximize that distance from one to the next. Let me just go to an example here. So the distance from one to the next. Let's say, for example, so you've got a reversal point, so the market reverses, and what you want to do is you have a distance you expect the market to move upwards, and let's say you have your target point, and then you have the point where you began. So let's say you began here, we had the reversal, and now you're looking to target this level, which means that between here and here you have a distance of however many pips, and then we can capitalize on this move until we get to the overall target point, and then we exit. Now, instead of one setup, instead of one entry, we can have multiple entries. And the way we do that without taking on extra risk, keeping the risk more or less the same while increasing the potential, is we have multiple entries at each swing point. So that means that every time the market creates a swing, creates a better price, we can capitalize on it, and we have another one. So then we have the initial swing. So let's say that would be the first, and then we have the other swing. We break a new high, then we have another entry point. And in each occasion, the stop loss would move to the last swing. So from this point onwards, let's say your stop loss was here, it would then move to break even when you've taken the second entry. So at the second entry, your stop loss will also be below, and as you move higher, the stop loss will come back to break even. And then you can do that on and on. Sometimes you could do it 3-4 times before we achieve the final target. Of course, that does not guarantee that we will reach the target. Anything can happen. However, we are maximizing the potential of the move and minimizing the downside or keeping the downside the same. So if it doesn't work out, fine. But when it does work out, you're really getting the juice out of it. You're really squeezing the most out of the move, and that will not just create profit, but also give you some extra extra margin, extra space, some more money to play with for other trades and when it does go wrong. So let's have a look at our Aussie New Zealand example. And this is actually live right now. The first thing you need is you need a higher time frame target point. You need to identify the reversal point and then plan your moves in between. So right now, what was the plan? The plan I had in mind, maybe you've been with me this week or the previous week, is to have this being the low, and then on the higher time frame, what I can see is, if I go to the monthly, is that we have these as the target points. So I see this as the low, this is the next low, this is the next low, and then from here we're going higher. So at least that is the plan. It doesn't mean it's going to happen, but for now that's the plan. So as that's the plan, we have our lows and we have our previous latest low, and now we have our target points. So I will be seeing these as targets and then maximizing the potential of this whole move. Yes, it will take time. Yes, this is the monthly time frame, but you could do the same on lower time frames. So I'm looking at the big picture and then I'm zooming in into the entries. So now we have our weekly, we have our reversal point right here, which we marked out on the daily time frame, and from here until, let's say, we've got multiple target points, but let's call this one the one that we're aiming for. Okay, so let's call this one the ultimate target point, TP. So therefore, what does that mean? That means that from here, where we have our first possible entry, may have a stop loss wherever your criteria is, and then we will have the next swing, and then we have the next entry, so that'll be entry number 2, and then this stop loss from entry number 1, so we'll call it stop loss 1, will move to break even. Then that risk is removed, and now we have risk on entry number 2, and then when the next swing comes, we have entry number 3, and the stop loss from entry number 2 will move to break even. And now we have just the risk on entry number 3. So what does that mean? That means you always have the risk is the same, whatever percentage it is. And therefore, as the market moves higher, we have profit being added on top of profit because we have entry 1 and entry 2. So we have several entries and not just one trade running. That is quite simply the way of maximizing your profits. Of course, you need high probability setup. You need to be very confident in the fact that we have our reversal point, so we have a low made. We do not expect to breach this low, of course, now. So kind of had a low marked into place. And obviously, if we breach the first entry, if the first entry goes wrong, or it just doesn't work out, then of course there is no second entry. It's only if the market is running in profit, if your trade is in profit, if it is working out as expected. Otherwise, we don't act, we don't do anything. It's only if this is working out as expected. So that is the basics of it, and it's the same with the sell scenario. So you want to point where you're coming from, point where you're going to, and then being able to capitalize it in between. And there's nothing to say that we won't reverse at entry number 2, entry number 3, who knows, unexpected news, whatever may happen. But, and this is a but, when this works out, it will more than make up for other setups. So hopefully that helps. If you have any questions, comment down below. And this is the method to capitalize on the moves. Combine the higher time frame target points, reversal points with the lower time frame entries, and monitor the chart. And you've got just one chart. So here in this case, we have one pair, one chart to look at, and then we can keep coming back to it rather than going and entering and constantly switching back and forth. All right, and that's basically it. It's as simple as that, really. And hopefully, maybe you'll make use of it, try it out. Comment below if you have or when you have, and then let me know how it goes for you. Right, that is us for this week. That is all the charts and the week in our review. Next week we'll be having some more. We'll get even more interesting, I'm sure. You can already see some setups possibly developing, and we will go through that, of course. Bye for now, guys. Have a good weekend, and I'll see you on the next one.